This episode is brought to you by Progressive Insurance. Do you ever think about switching insurance companies to see if you could save some cash? Progressive makes it easy to see if you could save when you bundle your home and auto policies. Try it at progressive.com. Progressive Casualty Insurance Company and Affiliates. Potential savings will vary. Not available in all states. This is a message for anyone who's ever felt like their bra was just fine. Third Love is here so you don't have to settle for good enough. A company founded by women just like you who know what struggling to find a bra feels like. For over 10 years, they've been redefining what a comfortable bra looks and feels like, focusing on innovative design and high-quality materials. We're talking about bras, yes, bras, made with thoughtful details to solve common problems. Want to stay cool and comfortable all day? Third Love offers innovative thermo-regulating fabric that has you covered. Looking for a little extra lift? Need smoothing? Even need to add a cup size? They've got it. And the fit? It's unmatched. Third Love believes everyone deserves a bra that fits perfectly, which is why they offer over 60 sizes from AA through H. They even have exclusive half cup sizes, which means if you're in between sizes, you can get a perfect fit every time. Stop settling for average bras. Get solutions made for your body. Get $15 off your perfect fit bra at thirdlove.com with code podcast15.
Welcome back to another episode of Investies. I'm your host, Linda Garcia, Texas State Representative and author of the book, Wealth Warrior. This week on the podcast, we are going to discuss the government shutdown and its impact on the stock market as well as the economy. But before we get into that, I do want to let you know that this Wednesday, October 8th at 7 p.m. Central Standard Time, I am hosting a Q&A over on Patreon. I am currently cleaning out my portfolio and getting it ready for end of year, which means that I am tax harvesting, eliminating some of my positions, and making sure that I am ready to pounce as soon as I see an opportunity. In fact, I did open up a new position. I am going to be discussing all of that over on patreon.com/investies on the exchange tier, where you have access to my monthly Q&As. If you want to join us, head over to patreon.com/investies and click on the exchange tier. Let's go ahead and get into how the stock market performed last week. Now, last week, all three indexes did close on a positive for the week. The Dow Jones on Friday did reach a new all-time high, but then retracted on some of its gains. For the week, the Dow Jones increased by 1.1%. The S&P 500 also reached a new all-time high on Friday and also retracted on its gains towards the end of day. The S&P 500 for the week closed at 0.72%, and the NASDAQ closed at 0.70%. Last week, we began a fresh new quarter, and I absolutely love the start of a new quarter because to me, it means that earnings season is right around the corner, and earnings season is like New Year and Christmas in reverse. You get a clean slate, everything is fresh. You get reports from publicly traded companies that you're invested in, and more times than not, this is when we get to see the growth in our portfolios. So this is when we get to bask in the reward of being a patient investor. So I absolutely love earnings season. And if you remember in the last quarter, we talked about how for years, the kickoff on earnings season is on a Friday. And last quarter, I noted how it was on a Tuesday. It felt really weird. We're having it on a Tuesday again. Earnings is kicking off October the 14th. So stay tuned for that. I want us to take a look at how the last quarter performed because last quarter was an extremely strong quarter. And I think that was also in part due to the 20% drop that we had in April, which was, in fact, a market crash. So let's talk about how we recovered. We had the Dow was up 5.2%. The S&P 500 was up 7.8%, and the NASDAQ was up 11.2%. So in Q3, we did see a full recovery of the market crash, and then we also experienced new all-time highs. Now, historically, Q3 has been a relatively weak quarter, mainly because it is believed that during this quarter, all of the top 10% that invest in the market are off on holiday and not necessarily focused on the stock market. It is also believed that there's a lot of liquidation that takes place because they use these funds to pay for private schools, etc. And so historically, Q3 has been a low performer, but it actually performed extremely well. And as I mentioned, I do believe that this was the opportunity that was presented with the April crash that we experienced in the market. Let's for 1 second unpack something that came to mind as I was talking about historic buying and selling patterns. I do feel like the market is changing. And while I've only been participating for approximately 12 years, there is this sense that I get the more that time goes by and I am more attentive to the patterns, there's a shift. And I think it has to do in part with what Robinhood did, which is enter this space and decentralized the stock market. They were the ones that came in with quote unquote zero fees to purchase stock, where before it would cost you $20 to purchase a share, and that was a fee. It wasn't something that you were going to get in return. And so when Robinhood did that, it really shook up a lot of how the market conducted business. And then mostly everyone removed their fees. I want to be clear. I do not like Robinhood, and I do not think that you should use it as a platform. Okay, so it's not like I'm hyping them up for you to use them as a platform because I don't like them. Now, I have reasons, and we can get into that another day. What I'm trying to communicate here is that the way the market is behaving, it is so much more volatile. Even in the last, 4 to 5 years, we are no longer seeing that traditional 8 to 10% increase on the S&P 500. We're seeing crazy returns in those indexes. We're also seeing explosive growth. Now, this could also be in part, of course, due to AI. We are in a new era where AI is driving a lot of the economic growth. And I think that that will most definitely continue as we saw the internet drive a lot of economic growth. So I think that's going to continue. But I'm talking about specifically the volatility that happens in the market. When I teach my course, Wealth Warrior, there is a section in that course where I show you how many crashes have happened in 100 years or something. And we could count those crashes on one hand. And now it's like we're seeing a crash almost every other year. The crash is so much more common. Now, one of the reasons, or actually the reason I show the crashes that take place over time is because I'm highlighting the fact that crashes aren't frequent, and so we shouldn't be afraid of investing. Now, with the amount of crashes that are taking place, the market to someone that is new may feel even scarier. To me, however, this is an incredible opportunity to purchase. I started a really strong position in April with the crash. I start positions with every crash. Now, I feel like I'm lucky to get to experience those crashes much more frequently because of the return on the investment that takes place in the recovery. The key here, and we talk about this all the time, is truly learning how to manage your emotions when these things happen. And then eventually you will understand the process and your emotions will flip. Instead of being afraid of a crash, you will be looking forward for a crash and, of course, preparing yourself for the next crash, which is what I am currently doing with my portfolio. And I guess my behavior is a little bit out of the norm because, again, we just had a crash in April. We had a crash in 2021. We had a crash in 2020. These frequent crashes are not normal. Now, where I was going with the Robinhood thing, it did decentralize, but then we also have the additional component to that, which is the internet that has made resources accessible, including our podcast here, Investies, including my book, Wealth Warrior, including our Patreon community. We have now taught folks how to manage their own portfolio and also understand that there is no requirement on how much money you need to invest. One of the most frequent questions I get is, how much money do I need to get started? And honestly, you could get started with $1 now that we have fractional shares. The decision is yours. And that was not the case before because you had to buy full shares. And of course, you want to buy quality shares. You don't want to buy penny stocks. And you can take your $1 and invest it by way of fractional share into a blue chip company. Now, this was not the case before. Before, you had to buy a full share. And if you couldn't afford it, that was too bad for you. What I love about a fractional share is that if the share increases by 5%, whatever money you put in will also increase by 5%. Now, prior to the decentralization of the stock market, there were mostly just portfolio managers. And a lot of portfolio managers would not take you on as a client unless you had a certain amount of money. And typically that was $500,000 or more. And so, yes, investing was completely inaccessible to someone like me, which makes me extremely grateful for the decentralization of the stock market and, of course, the access that the internet provides for resources to teach us how to participate. Also, another point I want to make is that working with a portfolio manager is great. I never want to steer anyone from not working with a professional in the space. But I also strongly advocate for understanding what your portfolio manager is doing with your money. And so this should be more of a partnership, not you handing over your money and allowing for that person to completely take full control without you collaborating and fully understanding what your portfolio manager is doing.
Monday Sidekick, the AI agent that knows you and your business, thinks ahead and takes action. Ask it anything. Seriously. Monday Sidekick, AI you'll love to use. Start a free trial today on monday.com.
A Mochi moment from Sadie, who writes, I'm not crying, you're crying. This is what I said during my first appointment with my physician at Mochi, because I didn't have to convince him I needed a GLP-1. He understood, and I felt supported, not judged. I came for the weight loss and stayed for the empathy. Thanks, Sadie. I'm Myra Ahmed, founder of Mochi Health. To find your Mochi moment, Visit joinmochi.com.
Sadie is a Mochi member compensated for her story.
I totally got sidetracked there. I said, 1 second, let's unpack this. And all of a sudden, minutes go by and we're deep into another conversation that I didn't intend for. But I'm happy that we are kind of unpacking this because it puts it on our radar and we can start to pay attention if, in fact, we are seeing a change in traditional patterns that take place in the market. Let's get into the government shutdown and how it can potentially impact the stock market. Now, here's another historical reference. Typically, government shutdowns do not impact the stock market. Sure, we will see the market come down a bit if there is a government shutdown, but it very rarely affects it enough for us to even pay attention to the market. It's typically a blip and then immediately recovers. However, this time it's different. Remember a few weeks ago when we were looking at the job reports and we were receiving alarming numbers and I was criticizing the BLS report, the Bureau of Labor and Statistics, on their antiquated ways of gathering data? Well, last week was the week when we were supposed to receive the latest job reports. This report comes out once a month and it reports on the previous month. So we were supposed to get September numbers and then, of course, compare them to the August numbers to analyze and see if we are uptrending or downtrending. This has been a very highly anticipated report. We're not getting the report, at least not anytime soon. And so we're having to make decisions on the economy without the actual data. Let's talk about the data that was released. We did have a similar report that is private from ADP, stands for Automatic Data Processing. If you remember, we talked about this last month. I like this report. It's private. It doesn't involve the government. It involves Stanford and, in the private sector, the payroll processing and human services software. So they're gathering actual, factual data. And the report was pretty bad. In job growth, we had negative 32,000 for the month of September. To help put this into perspective, in August, we had positive 54,000. And in July, we had positive 104,000. So this report showed us that we are in the negative. And then it also informed us that what we were expecting, what analysts were forecasting, was a growth of 52,000. So they were hoping that it would stay pretty much the same from the previous month. And then we adjusted for the last month because there's always an adjustment that takes place almost every single time. And the adjustment is actually negative 3,000 for the previous month of August. Let's take a look at what stood out to me the most. Job weakness was in hospitality of 19,000 job losses in that sector, which is expected because it is the end of summer vacation season, and so that industry does slow down. But we had a decline of 28,000 in the service provider industry. Professional and business services was down 13,000. And then another alarming number was that businesses with fewer than 50 employees lost 40,000 jobs, which is not good for our small business industry. Another piece of data that came out last week, prior to the government shutdown, of course, is the CCI, which is the Consumer Confidence Index. And this shows how optimistic people are about the economy and how likely they are to spend money. The Consumer Confidence Index registered at 94.2. This is down from the August reading by 3.6 points. Analysts were expecting 96 points. This is the lowest since April. And what happened in April? The stock market crashed by 20%. So there was a lot of fear in the economy back then, and it looks like we are definitely registering some anxiety surrounding the economy and how likely people are to spend money. I will say this. Here in Dallas, we have a fair, the Texas State Fair. While I don't have much to compare it to, I can compare it to the fairs in California, and it doesn't even come close. It has incredible exhibits, fun, fair food that can get really creative and is actually known for its creativity, barbecue. I mean, it's fun. And more than being fun, it is rooted in Texas family tradition, which means every single year it is a must. People grow up going to the fair. It gets so packed that you can't even comfortably walk around. The lines are ridiculous. But whatever, it's a tradition. People continue to go. That has never been a deterrent. Videos are currently coming out on social media where the fair is shockingly empty. It is the weirdest thing. People are not going. And I'm sure a big part of that is because of the economy and how people feel about their money. They're not prioritizing going to the fair, most especially when a lemonade is $14. Now, I also can't ignore the obvious. This year, we have cops walking around in packs, and it does feel intimidating. We are also a very big immigrant community, and a big part of the people that spend money in the state of Texas, not just here in Dallas, are immigrants. And so I think we are absolutely seeing in part the impact of that. This is a very big economic driver for the city of Dallas, and I am curious to see how this all shakes out and what the numbers look like in terms of how much the fair brought in this year. So we have consumer confidence much lower than expected. And of course, the ADP data came back bad. We don't have any other data because the government is shut down. But from what we can see right now, given that the market closed positive for the week, it doesn't necessarily feel like it's going to really impact the market. This, of course, can all change. So, obviously I'll be paying attention to that. But we closed positive. We did see a downturn when this did take place. Mostly, I feel like the market is processing it more as noise. Not that the shutdown is noise. It is something that we should absolutely be paying attention to very closely. But what I'm saying is that it is noise to the market and won't necessarily be significantly impacted. I think it is actually helping that we don't have the data, because if it was really bad, then the market would absolutely react. Given that we have earnings season in a couple of weeks, we will have a better picture of what is happening as well. As you know, I do believe that the forward guidance from CEOs is very telling on how the economy is doing, and also their inability to provide forward guidance is also very telling. Typically, we will see a reversal in the market if we don't get forward guidance. So while we don't have data coming out from the government, we of course have indirect data coming out from publicly traded companies in the next couple of weeks. It will be interesting to see how the feds react to all of this, on how they make decisions if we don't have an agreement in the White House. If you like the work that we are doing here on Investies podcasts, please head over to your podcast player and make sure you rate and review the podcast. This helps us with the algorithm. I also want to share a couple of reviews here from Sophia Jose. It says, "Love it. Thank you for your passion for teaching us and keeping us updated." Jar Beans says, "So much info, compact time. I love how much information I get in a short time. I love the passion and Linda's voice is soothing." Thank you. Thank you. And then we have one from Boss Lady Veras. "Massive info in small doses. I love listening to this podcast and anything Linda Garcia has to say. I love listening to the analogies on the current market, and she breaks it all down in layman's terms. This is so important for our community. I look forward to listening every episode. Keep up the good work, team. The work is invaluable." Thank you all so much for your reviews. You're listening to Investies, a Cosmic Standard production. I'm your host, Linda Garcia. A special thank you to the team, Asia Simpson, Eliza Smith, and Jacob Winnick.
If you work in marketing, your tabs tell a whole story. One for the deck, one for the logo, 3 for the versions you're afraid to delete. Dropbox Dash searches across all your tools, then helps you draft copy that actually hits. Because stuck isn't a strategy. Learn more at dropbox.com/dash.